Welcome to Ask Fear and Greed, where we take your questions and do our best to answer them. I'm Michael Thompson, and good afternoon, Sean Aylmer.
Good afternoon, Michael.
Sean, today's question comes from Chantelle, and she shared it via Instagram. There are obviously multiple ways you can do it, by Instagram or LinkedIn or Facebook, or just go to our website, fearandgreed.com.au, and do it that way. But Chantelle has chosen Instagram. Great choice. And she says, can you decode some of the jargon that I hear all the time? Which, I mean, that really kind of feels like our job, isn't it? It's what we're put on this earth to do. What's the difference? That might be overreaching a little bit there, Sean.
A little. Go on.
What is the difference between growth stocks and value stocks?
Yes, good question. So growth stocks are companies that are considered to have a potential to outperform the overall market over a longer time period. It's kind of like they've got a lot of future potential for growth is what we're investing there. Value stocks are companies that are trading below what they're really worth. I suppose that's kind of the way to think of it. And as a result, they will provide a superior return in the future. Now, people always talk about value versus growth. It's not every stock is always a growth stock or always a value stock. So the big growth stocks of recent times have been the tech companies in the US. They're always considered the kind of the good ones. Healthcare stocks as well. If you think of value stocks, you might think of consumer discretionary stocks in Australia. So Domino's Pizza, you might say that is a great value stock because what it's trading at now, based on its profitability, is way below what it has done previously. So there's value in that stock. So they talk about a thing called price to earnings ratio.
Yep.
And that's what it's trading on compared to profits. And typically, value stocks have lower price to earnings ratios than growth stocks. Typically, value stocks are kind of considered underpriced.
Right, okay.
Whereas growth stocks are more sort of richly priced. Often the value stocks pay higher dividends, whereas the growth stocks tend to invest the money in building the business, those sorts of things.
And do certain kind of economic conditions benefit growth stocks or value stocks? Say for instance, kind of with interest rates higher, is that going to be kind of better for growth stocks or better for value stocks, or can you not really make a sweeping statement like that?
You can't make a sweeping statement like that. So value stocks are often known as cyclical. Well, some value stocks are cyclical stocks, so stocks that do well in strong economic conditions and do poorly in other economic conditions. Growth stocks tend to do well when interest rates are lower. Having said that, as interest rates rose, the Nvidias of the world did incredibly well. So you sort of have to throw that out the window a bit. You can't really broadly say, good times are better for value stocks or worse for growth stocks. You really have to look at individual companies and, I suppose I'm trying to answer your question. Broadly, economic downturns, you might actually go for a value stock because it'll be underpriced, and so the future is promising.
But just like anything, you need to take into account a whole stack of other factors, like because you mentioned obviously kind of Nvidia, and at the same time we had AI and the demand for AI products booming, which of course had a greater impact on Nvidia than any kind of interest rate movements.
Yeah, and one of the truth of the matter is that often more mature companies are seen as can be value stocks. Mm-hmm. Whereas growth stocks are often young or rapidly expanding companies. Yep. So healthcare and tech are a good example of that.
Look, you know what? Again, it is high risk marking our own homework. But I'm going
Go right ahead.
I'm going to give us conservatively an A+.
Really?
Yeah, I reckon we've done a great job.
What I shouldn't concede at this point is that value and growth is sort of a concept that's been around forever. And, on one day, a stock can be a growth stock, in 3 months' time, suddenly someone's talking about it as a value stock. And so it is a very grey line between the two.
And of course, we are not an investing podcast, and
We are not.
You may
We are not.
You may have gathered that over the last 4.5 minutes, but you should seek professional advice before making investment decisions. But Chantelle, I do hope that we have answered your question, and maybe A+ was a little bit kind of optimistic. Maybe it's just a straight A.
Yeah, I'll take an A. I'll take a B+, to be honest, but
okay.
whatever.
All right. No, I don't really go below an A. Thank you very much, Chantelle, for the question, and thank you, Sean, for answering it.
Thank you, Michael. Thank you, Chantelle.
Remember, if you've got something that you would like to know, then please send your question through on LinkedIn, Instagram, Facebook, or at fearandgreed.com.au. I'm Michael Thompson, and this is Ask Fear and Greed.